Good Monday, traders. Welcome to AskTraders.com to our weekly market analysis. In today's video, I would like to bring your attention to the euro versus Australian dollar currency pair. But in order to get a bigger picture, I would like to first go through previous analysis that we had, specifically on the Australian related currency pairs. The oldest one was Australian versus New Zealand dollar. So let's move back to that currency pair. These were analyses expected from this pair, and the support level at 1.0573 has been tested. The support has been rejected as well because there was a spikes, yet another spike, but then price failed to close below the last spike. Overall, the support has been reached and rejected. What that could mean is that the Australian dollar will be starting to outperform the New Zealand dollar, but as long as this support holds. So far, it was respected, and there might be spike yet again, but if there will be a 4-hour break and close below this level, obviously the New Zealand dollar is likely to outperform the Australian dollar. But for now, Australian dollar remains strong. We could see quite a strong upside move here, which means Australian dollar is getting more interesting. Another idea we had was on the Australian versus Swiss Franc. This was a couple of weeks ago, and the expectancy was that the price will be going towards 161.8 Fibonacci retracement level at 0.6698. It almost precisely corresponds to the psychological resistance at 0.67 level, and this price is likely also to be tested. We can see that today price actually starting to move up, although it is still struggling to produce higher high. And the trigger point perhaps for the rally, if there will be one, is the break above the resistance formed at 0.6585. I can mark it on the chart so you can clearly see this level. So here was a one bounce, second bounce, and this obviously now is the resistance. And the price needs to break above to confirm this. But still, it looks pretty bullish because the long-term trend remained heavily to the upside. Moving on to another idea we had previously, dollar versus Japanese yen. Here there was a mixed sentiment. So we had a potential shorting if there will be break below this support area. Price did break below, but hasn't reached the potential expected downside support. Even from this price, there is a risk that there will be a very strong move to the upside, and price even might go towards the resistance that has been mentioned previously. But overall, this support has been broken, and there is more risk that the pair will go lower. But I think there will be more likely a range trading rather than any sort of trend, because what you see, guys, is clear range trading. The double bottom here has been formed, and there is more probability of the upside move, and where price might be getting back to this resistance area formed previously. So clearly this is the resistance, and if we mark the support, this is the support. The range trading is likely to continue within this range for the time being, and only if price manages to break above the resistance or below the support, there will be some sort of trend, only then, but not before. So overall, still probability is slightly in favor of the move to the upside, simply because it is a range trading and price is close to the bottom of this range. So finally, moving to this week's idea, which is euro Australian dollar. And this is a 6-hour chart, just to show you what's going on the bit higher time frame. We have resistance clearly formed near 1.6560, and this was a previous support. There was a rejection. After that, price started to produce lower lows and lower highs, indicating that the downtrend might continue. Another thing is break below the uptrend trend line, which has occurred on the 3rd of July. Next point is the break below the ascending channel, which has occurred on the 1st of July. So break below the channel, then break below the trend line. There was a kind of small range trading on this pair, but what we can see is the Fibonacci level 50 and 23.6 specifically applied to this correction to the upside are playing a role of resistance. There was a resistance which was rejected on the 29th of June, and now we have the resistance which has been rejected this Friday, so basically on the 10th of June. And perhaps we are about to see another wave to the downside, because the probability are stronger in favor of the downtrend overall, although the range trading could take place as well. We see this level here, this high, and if there will be 4 and preferably daily close above this level, price is likely to retest the resistance at 1.6435 and even could go higher. But for now, up until this resistance is being respected, the probability of the downtrend remains very high. What we see in terms of potential support levels, first off is 88.6% Fibs, which is 1.6093 level. This is the nearest support, and if this support holds, trend might be reversing to the upside. This is the final Fibonacci support, which still suggests that this is only a pullback rather than the downtrend continuation. Although if there will be a break below this level, it will suggest that it is a downtrend in fact. In that case, there are 3 support levels. Specifically, these are psychological levels. 1.6 precisely, this should be quite a strong one, but can also be broken. Another one is 159.00 and the third one is 158.00. And this actually goes in line with our previous analysis, which suggests that the Australian dollar might be getting strong, specifically Australian Swiss franc, which is highly correlated to the euro versus Australian dollar. These are very correlated pairs, and along with the Australian Swiss franc moving up, euro versus Australian dollar could be starting to move down. And we'll need to see whether any of these support level will be rejected if reached at all, and whether this resistance will hold or it will be broken. So that's it for now. We will meet you next week on Monday. I hope you enjoyed the video. Until next time.